All right, ladies and gentlemen, welcome to Money Mondays, installment number 2. See, today what we're going to talk about is the different levels that you can get involved in when you do real estate investment. So, I guess the first level that we can talk about is bird dogging. The second is wholesaling. The third is rehabbing, and the fourth is, creative real estate strategies. All right, so the first thing we're going to talk about today is bird dogging. Bird dogging is the first level, and all it requires is you just to be a property finder. So if you go out in your city, for example, I live in Baltimore City. I mean, I don't live in Baltimore City. I work out in Baltimore City, charm city, best city in the world. And let me tell you, bird dogging is a way to find properties and get quick cash. How it works is you go out, you find properties that are vacant, abandoned, or people want to get rid of them for whatever reason. Either they're in probate, they're tired landlords, they've got back taxes, whatever it is that they want to get out of. You as a bird dog find that property, and when a wholesaler or a rehabber or somebody else gets that property under contract, they'll pay you a portion of their fee. I'll pay you a fee like anywhere between 500 to sometimes up to 2,000 or more dollars, depending on how much work you do and how much the property is actually going to be worth. All right. The second level that you can get in on is wholesaling. Wholesaling is actually what I do, and there are many ways to do that. Just like a bird dog, you go out and you find properties. The only difference between a bird dog and a wholesaler is the wholesaler actually gets the property under contract. Now that contract that you get is an asset. And what you can do is you can assign that contract to somebody else. All contracts are assignable unless they say that they aren't assignable. So you can assign that contract to a third-party buyer, and what they'll do is they take a hold of that contract. So what it is what we get the property is an offer to purchase or purchase and sale agreement. And when we assign that contract to a third-party buyer, we can charge an assignment fee. Or sometimes you can double close on a property, which means, or simultaneous closing, which means you pay 2 sets of closing costs, and you basically pay for the property and get a spread on it, so nobody gets to see how much you make. That's what it is. That's what wholesaling is all about. So for example, I got a property under contract. It actually fell through very recently, where I went out to Baltimore. It was in Liberty Heights area, and what I would have done is sell the property for a $10,000 fee. So that's $50,000. I was going to sell it for $50,000. I got under contract for $40,000, and somebody would have rehabbed the property. Somebody would rehab the property and flip it. Now you have to be very careful when you get a property, just because you have to find something that works, and then you assign an inspection period so that you can get out of the contract. There are various exit strategies that you have to employ when you go out to find a property. Okay? And that's even more important when you are doing rehabs. So when you're rehabbing, you want to find a property that sells quickly. What you do is oftentimes you buy a property from me, the wholesaler, and then you fix it up really quickly. It takes typically, depending on how much the property needs in work, it could take 3 to 9 months to rehab a property. It's important that you get a scope of work done beforehand so you can estimate how much of repairs you do. So basically what you get from the wholesaler is going to do a maximum allowable offer, which is whatever percentage is your after repair value times 0.75. This is technical, actually. It's very detailed, but minus your repairs, minus your closing costs, minus your wholesale fee. And that's what the rehabber is going to pay to the wholesaler who finds the property for them. It's very important to have a contractor go through and get that scope of work so that you know how much in repairs you are getting, so you can calculate, how much you want to make. I guess typically off a repair, you want to make anywhere between, typically you want to make $50,000 off a repair, a rehab. You can figure out that figure for yourself, but that's basically, you want to find 5 comparable values in the city that have the same square footage, same bedrooms, same bathrooms, or similar. In a similar area, similar yard sizes, the homes are comparable. So comparable sales recently. So for example, let's say you find a property that's worth $165,000. Okay? After repair. So let's say you get the property under contract for $20,000 and it needs $65,000 in repair. So now you're at $95,000. So you have a comfortable, profit margin of about $70,000 to play with. And you got an even space for an extra $20,000 just in case. Just in case, anything goes wrong, you have an extra $20,000 to play with and still come out with your $50,000 profit. That's quick cash. Those are your quick cash methods: wholesaling and rehabbing. The fourth strategy is buy and hold. So we've gone through bird dogging, wholesaling, rehabbing, and the fourth strategy is buy and hold. Excuse me, I said earlier that it was creative real estate investing, but we're gonna do the fourth strategy is buy and hold. Okay, so a buy and hold investor is trying to create long-term wealth. And by long-term wealth, you mean you hold that property for many years and then you realize a return. So when you do a buy and hold investment, you're typically buy and hold investors typically are able to pay a little bit more for their property. So what you're gonna do is, because they're looking at the long term, what am I gonna, make out of this property? And so maybe over a period of 5 years, you're looking for that property to pay for itself. You get a mortgage on the property, and after you get your mortgage, you put renters in and let that property pay for itself over time. So typically you want to see at least a $400 return profit every month. So that way you can pay for any kinds of repairs. You want to set aside about 20% for 10 to 20% for any repairs or costs that you might incur later down the road, when you have to fix things. But $400 profit is what you want to come out with no matter what the property is, minimum. All right, you can rent out to Section 8 tenants, there are voucher programs, many different ways to approach getting a buy and hold property. Similarly, you still want to get the property at a discount so that market rents pay for it, more than pay for it. The lower you can get the property at, the lower your payments will be. You can always do different terms as well when you get your mortgage, but you can talk to your mortgage broker about what can be available. You can have a 10-year note with a 30-year amortization rate. And amortization period is just the time that it will take to pay off that investment, that mortgage. So basically, a 30-year amortization period means in 30 years, you will have paid off that mortgage to the bank. But you can have, that's basically how it is. Yes, and creative real estate investment, I didn't mean to get into this. Creative real estate investment is like your buy and hold property, not your buy and hold, your lease option, you're subject to, there's several options. A lot of people like to work lease options. I mean, there are also flex options agreements, probably a ton I don't even know about. But those are your basic, creative real estate investment strategies, and we'll talk about that more in upcoming videos about creative real estate investing. All right, this has been Money Monday number 2. Have a great day. Thank you.